Hello.
Hello. Welcome to this week's edition of Vishal and Company. Today we are back talking about inflation reaching decade highs, opinions that the Fed's easy money is lulling investors into a false sense of security, and what we think will happen at next week's Fed meeting. We are also going to touch a little bit on meme stocks, the crypto bear market, and El Salvador being the first country to recognize Bitcoin as legal tender. We have a ton to talk about today, so I will get right into it. I'm going to pass it over to Vishal.
Thanks, Maddie. So this week is very similar to what I said was going to happen last week. Last week, markets were actually very dull, very boring. Range, as you can see, each of these candles represent one day of action. But then on Friday, we had a big green candle, and that was because US job data did not meet expectations. Hence, traders forecasting that the Fed will not likely be talking about tapering on their Fed meeting, which is actually coming up next week on the 16th of June. This week, boring. Thursday, bam, we had a nice big pop, and that was because yesterday, actually, funnily enough, we actually had inflation data showing up the highest since I believe 2008, over a decade, and the markets actually popped. So a lot of people surprised by that because they were thinking, okay, if inflation data is higher, it means the Fed is likely looking to start talking about tapering, which would maybe cause a taper tantrum. But as you can see, markets are not really buying that or expecting the Fed to change policy next week. As you can see, this was the headline that greeted us yesterday morning. Consumer prices jump 5% in May, fastest pace since the summer of 2008. The 3.8% rise in core inflation, which excludes food and energy,
Of
was the
course, so it
sharpest.
doesn't look like there's inflation.
Yep, yep, was the sharpest increase in nearly 3 decades, and apparently it was surging used car prices, which helped drive much of the inflation gains there. And then, yes, the jobless claims also came at 376,000 jobs lost for last week, higher than the estimate. But I mean, all the data is looking at the CPI, or the Consumer Price Index. Here's a little chart so you can see pretty big rise in inflation. We haven't seen something like that since after the GFC, or the Great Financial Crisis, in 2008. But as you can see, the Fed has been largely dismissive of the inflation numbers because, according to them, and we've heard this term many times, this inflation is transitory, right? So it's not real inflation. It's just inflation that's occurring because economies are reopening, which means people are spending more money on buying goods. But according to the Fed presidents, once the economy is reopened for a longer period of time, people are going to stop spending money on goods and start transitioning more of that money to buy services, and then the inflation will disappear, and you'll see it's actually under 2%, which does not meet the Fed's threshold for interest rate hikes. So it's pretty wild. Like, the inflation numbers are coming up high, but the Fed's telling us, don't worry, that's not real. It's actually transitory. And you guys know I've been talking about what I think it's been months now since I wrote that article on oil, but rising oil. I mean, oil just broke out. It is broke above $71 a barrel. And I've always said that this is going to be what the Fed will point at in terms of transitory inflation, because of course, if energy prices are higher, fuel costs, transportation costs. Although the CPI data is not really showing any inflation in transportation costs. Maybe people aren't driving enough anymore. I don't know. But with oil going up higher, looks like it's going to hit 76, and then from there, we're probably looking at the 90s to 100 if we do break above 75. But that will also add to the inflationary pressures. TK, you have anything to say about this? I know you've been looking at this data.
Yeah, so it's looking at the two cases. So people are saying a lot of what's happening now, especially with the Fed, kind of similar to Alan Greenspan in 2000 in the 1990s, where he was kind of the market was waiting for him to save. there wasn't really anything fundamentally happening, and whichever numbers came, he would spin it in a way. So what I find interesting is the juxtaposition between the two statements of the Feds. At the beginning, uh, the Fed chair was, so let's say 2018, they were skeptical about what was happening in the market. It was overvalued at the time.
Mhm.
And in 1995, Alan Greenspan said the market is experiencing irrational exuberance. And we're around the same kind of price earnings multiple right now. I think $35, you're paying $35 for each dollar of earnings right now. And we're kind of in the same space now where the inflation numbers are coming out. We're coming out of one exogenous recession, going into a bearish kind of recession. So it's kind of weird when you look at both points and you're like, oh yeah, the same thing is happening again, but now it's a little more vicious because of the COVID pandemic. So I'm sure like most people have already watched Buffett's annual meeting by now, but he looks at the numbers for his companies, and he's in manufacturing, housing, railway, etc. And back in March, he was saying that inflation is way higher than the Fed is reporting, and this was in March. Was it March? Yeah, or
The
April.
price of lumber gone astronomical?
It has, yeah.
So as well, yeah. It's just they have a way to report the numbers that changes and adapts
Of course, they
each.
just keep tearing it out of the core inflationary index.
Yep.
We won't talk about that one. Well, that's not important. Food. Who cares about that?
Mhm.
So it's like I would not take this 5% at face value.
So,
Yeah,
just,
what
just
was it?
to,
4.7 was that the guess?
just to add, like what the market is indicating. Obviously, if markets are moving higher, they're not expecting the Fed to act anytime soon. But of course, we look at the bond market, right? So that kind of helps. It shows you where interest rates are going, and because the bond market is actually breaking out. So remember, when BND is actually moving down, it means interest rates are moving higher. But when BND is moving up, like like this, it means interest rates are actually moving lower. And it looks like my page got, no, there we go, we're good. So it looks like we're about to get a breakout here, and you can even see here, it looks like, I'll close my numbers, it looks like that's the one that was causing the issues. But you can see here the 10-year yield broke below 1.50%, and it looks like interest rates want to actually decline lower. So the market is actually not pricing in any type of Fed rate hike, whereas, and this is where it gets a bit interesting, the US dollar is actually showing the opposite. It's actually pretty strong today, got a really nice pop, and you would expect that obviously if maybe there's a risk off sentiment, so people are afraid and they're uncertain about things, so they're running into the dollar and they're also running into bonds. But if the dollar is moving higher and it's moving significantly higher against the loonie and the Mexican peso today, maybe some people are factoring in, hey, the Fed actually is a bit more bullish or hawkish. That's the term, sorry, hawkish next week, and they might be signaling not like a rate hike, but they might just tell people that, hey, we're thinking we might start tapering at the end of the year or January of 2022, right? So it's not like they're going to make a decision to taper right away, but they're going to say, hey, we just want to let you guys know that we're going to do it down the line.
I think
Although
for
they
them to
did
do a
say,
knee-jerk reaction is actually defeating. So it's better that they actually wait to see if this
yep,
settles in and how much it
exactly,
does
yep,
settle in before they actually try to do anything.
yep,
Because otherwise, they're
yep.
just going to upset the apple cart. There we go.
Yep, 100%. They don't surprise. They won't surprise the market. So right now, we'll see what they say, but right now people are expecting them to sort of be a bit hawkish, just looking at the dollar and what the bond market's doing. So yeah, they won't surprise the markets. They generally don't do that because if they do, yeah, you'll see significant drop in the markets and that taper tantrum. Speaking about like billionaires, you mentioned TK Buffett, but even Stanley Druckenmiller here, he himself said, "Hey, look, the Fed is not actually the market's not listening or reacting to any of these inflation data. They're going to continue to, like, market participants will continue to ignore risks and disregard looming signs of inflation until the Fed stops canceling market signals." So essentially, what Druckenmiller is saying is no one's buying anything the Fed's saying until the Fed actually says, "Hey, look, we're looking or we're
But that's not
thinking about
actually
taking
out of
them."
intelligence. We have a whole bunch of a new generation of investors who
Yep.
really don't know their butt from a hole in the ground, and are so easily swayed by memes to buy into stocks that they 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 don't know, or they're just stupid. Like, I'm never going to lose, which is the popular sentiment, right? Like those people that bought into Bitcoin, that kind of stuff, right? I mean, that sentiment is not necessarily one of intelligence; it's one of ignorance. That's my
I
opinion.
agree. You know what? As usual, kind of look back at some of the companies that have been there and kind of done the same thing around times like this. So uh, it was same thing. There was no growth. There was a lot of gambling and speculation. There was a bunch of new people coming into the market, and companies started buying and selling put options on their own stock. Uh, this was in 2000 and just before the crash, and companies like Microsoft were selling put options, and but they became hedge funds. It kind of reminds me of our boy in Tesla there, where
Mhm.
he's now a Bitcoin hedge fund,
Yeah.
where it's like, oh yeah, there's nothing productive to do. You can't buy your stock cheap anymore. You
Yep.
rather go into all the other bubbles. Uh,
That's
and yeah, it's
basically
just
it.
it's, people are just moving cash into one area and moving it around in different places like that. So I was like, yeah, it lasts for now. What happens when the market loses faith
Mhm. Mhm.
on a quick day?
I think
And
it'll
some of
be a
these,
run. It won't just be a gradual decrease. Like you're talking taper tantrums, but I
Yep.
think it'll be just people panicking and just selling like crap and running out of the market, hoping to. Because this is the ridiculous thing. A lot of these new investors are strutting around going, I made 4,000%, 5,000%, 150%. Your money's still on the table. You haven't made anything. You only make something when you sell,
Oh,
right?
take profit.
yeah, and
So this
So
was
they're
what
the
would
holding. What is it?
you what would you recommend doing for any new investors? Like if someone's just coming in like this type of a climate, what would be something to look for or look at?
this is just me. So I've always said to people, like, I trade, but I also invest, and I don't like recommend people to start trading, right? I'm always like, hey, look, you don't have to be a trader, right? If it's just something I enjoy to do and I like to do, and I've been doing for a while, but I think you have to have like, I think you don't want to miss out on your future gains, and you have to have a long term, right? And when I mean long term, I mean you're looking 10, 20, 30 years, and not like next month or anything. And what you should be doing, and this is what I encourage everyone to do, is have a long-term portfolio. Look at where you spend money, right? And buy those stocks and hold on to for the long term, right? So, things like, I don't know, if you buy a lot of Coke, buy Coke stocks. Lululemon, uh, Aritzia was a popular one. Some of these that, most of them are value, but nowadays we're
There's a lot of
finding a lot.
designer stocks out there. You
Yeah,
really
there's a
do
lot.
have
Yeah,
to find something that has a fundamental support,
yeah,
that has a
yeah,
business. It's not incredibly overvalued.
yeah,
I'm going to hit this again, not because it's the best stock out there, but things like United Rental, right?
yeah,
It has a solid business. It covers the entire continent, and it's fixed into construction. So wherever the infrastructure goes, so does it, right?
yeah,
Occidental Petroleum, other types of companies that have a foothold in the infrastructure building of the country, right?
yeah,
They may not be sexy. They may not, have,
yeah,
Musk's face all over it, but
yeah,
they are actually going to return something. And as Vishal said, don't treat the stock market like a fucking casino, because that means you've just built a house that's always going to win, right? Treat it as an investment. That's what you really need to do. And that's basically what it's all about. Trading,
yeah.
I hope Vishal forgives me for saying this. Trading is a bit of a thing that I don't think anybody should really get into. I think it mucks the market up. But I believe that if you just go at it as an investor, then you're going to get your return. Just be smart about it and leave it in for 20 years, right?
And that's the
This
thing.
isn't
Like the
something
thing
you're going
about
to make money on in 2 days or 3 weeks or even a year,
right,
right?
exactly. Yeah,
And if you're
yeah,
looking at that, you're in the wrong fucking game. I couldn't correct
In
myself
addition
that time.
to in addition to investing the money, invest the time.
yeah,
Invest the
Correct.
time required to
yeah,
learn what is and is not an effective company. Read all the necessary books and make the decisions yourselves. Don't go online and look at, I don't know, the Motley Fool and let Fool decide, teach you what is and is not a good company to offer. Like most of their advice is foolish.
Yeah. And see, the thing about long-term investing too is, stocks aren't moving up forever, right? So if, say, you're buying, I don't know, Uber monthly and you're holding for a year or something, or 2 years or 3 years, you're going to be adding to your position. You're averaging down. That's, there's a very simple, it's called the DRIP, dividend reinvestment program. So I think that's something, a lot of Canadians become millionaires this way, right? Where they'll buy just companies that specifically pay dividends, right? And it's usually, I know a story of someone who was putting $200 in her drip per month, and she retired with 2.3 million, at the age of 50. And all she was doing was buying every month $200 worth of BMO stock, Imperial Oil, just stocks that pay a dividend and are on the Canadian market, right? Nothing sexy, but the dividends are reinvested to buy more shares of that stock. So in the longer term, they grow, right? But a lot of the things that people are looking at nowadays that you tend to use a lot. So for example, your Snapchat, your Facebook, your Uber, your DoorDash, they're not paying dividends just yet. But they're likely going to still be around here if a lot of people are still using them.
Maybe not. I'm sorry, man. I can't back that. It's all part of the bubble, those service industries. Yep. There's so much legislation and regulation being bandied about in regards to how they treat their employees, which they are, even though they love to deny that they aren't, or deny that they are, but they are. So this is the chickens are going to come home to roost on most of these businesses. Airbnb, Uber, anything that uses the gig economy is soon going to have a reckoning. So I wouldn't necessarily say hop into it now. I would hop into those after they've had their fingers crushed by legislation, because basically that's when the real business will happen, right? I suggest getting something that's actually even less sexy than that. Don't just go with stuff that you're buying, because a lot of what's being sold today is shit. Sorry.
Gig economy, by and large, is just a quick and easy way to exploit the worker. And governments are going to be all over that as soon as they realize that they're not getting as big as okay, this might be just me, but governments are going to be all over that as soon as they realize they can get a bigger slice of the pie if they regulate these better.
Yeah, that's true.
Well, currently they're not paying any taxes at all, so why not, right? I mean, you've got billionaires like Musk and Bezos. Musk in 2018 paid no federal taxes. This is a guy that espoused that he didn't care about money, that it never really mattered to him, and he made a promise to sell everything. He hasn't done any of that, and he's jipping out on taxes. So fuck him. Let's tax the crap out of these assholes. Sorry.
Well, we're seeing that. It's starting. The corporate tax, at least 15%, is starting. That was the headline for the G7. So like just as Galen said, the value stocks that have dividends are much more safer, of course. But the only reason I recommend, looking at where you spend money is because you'll actually have an interest about, researching about those companies, right? Like not many people want to read about United Rentals and what they do because they're not really passionate about it, right? But if you make investing enjoyable, it'll take out a lot of stress and other stuff. And, trust me, I've been doing this since 2012, right? There's been nights where, I was buying Chinese companies that were fucking selling almonds, right? And like mushrooms, like actual mushrooms in China, but they were having PEs of like 2 or 3, which were considered the best investments, right, at the time. Profitable as well, right? So if you look at things that you spend your money on every day, you're more likely to enjoy the process. And I think that's like really important when you're investing, because then you'll actually want to look at, the future of that company and all that, its competitors and all that kind of stuff.
But if all you're doing is doing Uber and DoorDash and shit, shake your head a little bit, then invest.
Yeah. You read about Uber, and then obviously that will go down to the taxes and hey, what's the competitors? The only reason I pick Uber is I just think Uber's better than a DoorDash because it has both it has a Lyft component and the DoorDash component in it together. So I think Uber compared to say a DoorDash and a Lyft by itself, I think Uber is the one that is probably going to be around longer than the other two. But I mean, that's just thinking. That's obviously part of investing is speculating too, because it's a risk, right? There's no investment that's going to give you free money. It used to be government bonds back in the day, but not anymore when
Well,
you're
I think there's
yielding.
classes of speculation. Yes, of course,
Yeah.
it's all speculation, but there are stocks out there that have a solid backing and in a good trajectory and will continue to do so, at least for the foreseeable future.
Yep.
The other speculation, which we are wrapped so tightly in right now, is like, oh my God, I could make 100% in the next 3 months because there's a whole bunch of fools out there that are even stupider than me. Right?
But remember, all
Oops.
these good companies,
I feel like I'm insulting
sold
everyone.
off.
Sorry.
Yeah.
All these good. Well, the thing is, all these good companies sold off like 40% when that stock market crash happened, right? So the thing is, even though they're good companies, everything will sell off if people are scared, right? So that's
Well,
the
no,
whole idea.
absolutely. But in these
Long
ones,
term.
if a 20-year
Yeah.
term, that
Yeah, exactly.
recovers, right?
Yep. That's what I'm saying. Yeah,
With
long
the other
term.
ones that are up in the air right now, and I'm just going to keep hitting it, Uber and all these ones, because I don't think their business model could actually survive under regulation. That's
Right.
why I'm saying this.
Yeah.
So, and neither could Amazon. Most of these guys are dependent on monopoly and abuse of their stakeholders to keep ahead. So, if it ever gets to the point where Amazon really has to take care of their workers, which they're sort of trying to make an attempt at now, they're going to fall by the wayside because there's no way that you can export that kind of a size of a business with that sort of domination and actually have a proper business. It should be broken up, right?
You're going to like this, Gillen. There's actually a petition to not allow Jeff
Okay.
Bezos to re-enter Earth because remember his flying up
Well,
to
yeah, no,
space?
exactly. My hope was that both he and Musk, because they sort of like chomping at each other's necks, both jump on a rocket, and then eventually both of those rockets explode, so we don't actually have to worry about either one of them. That's a real mean thing to say, but you know what?
It's funny.
This
People are
really
like,
effectively leads us into meme stocks. So,
Awesome.
what are we thinking? What's the opinion here?
So
I have a
basically,
note about Wendy.
yeah, so Wendy's was the big it's almost, and Jim Cramer said it. I mean, obviously it's sold off now, but it was a whole different approach. Basically all these Reddit guys, they've been looking at short squeezes, right? AMC, hey, let's look at, their short squeezes, and there was, you could say that was a very smart way, right? They saw these institutions were heavily shorted, and they tried to squeeze them. But this week we saw Wendy's being a big mover. Not just Wendy's, but I was sort of lucky, I guess, on this one. I was actually trading Why is my internet just? I was trading WWE. This popped as well, and what's happening now is people aren't just looking at short squeezing companies. A random Reddit user will say, "Hey, everyone, let's buy Wendy's," and everyone will buy Wendy's now.
Yes,
So
but then this is
yep.
also the greater fool theory. Look at the spike and look at the drop, right? A few people made a lot of cash while everybody else was holding the bag. So
Exactly.
be careful, man.
Yep.
Don't get your
Be
stuff
careful.
off of Reddit. Don't get your stuff off of fucking TikTok. Do some reading, for God's sakes.
Yep.
Sorry.
So we're at that point now where it's just pump and dumps really, where someone on Reddit will just be like, "Hey, let's all buy this." No short squeeze position at all, and they'll just get in, push it up, and then you'll see the next day we'll see just big sells. But hey, I mean, they took Wendy up to all-time record highs.
He was asked in like 2016, just when Bitcoin hit the first bull. Charlie Munger, I think his partner, Buffett's partner, he was asked, we know what Buffett's going to say, but would you buy Bitcoin or any of the cryptocurrencies? And he said, he didn't answer really on Bitcoin, but he insinuated, he's like, there's no difference from buying a turd at $1 and then buying it at $15. It's still a turd. I was like, wow.
Make worse. What does he really feel about it? For me too, while we're on the Bitcoin thing, I mean, it's currently, I think, reaching, not reaching anything. It's currently normalizing. I think it still has a long way to go. And oddly enough, JP Morgan, which was touting it just a little while ago, is now going, the sky is falling, the sky is falling. So basically, I think what we're having here is a realization of the non-value that's actually accompanied most of these cryptocurrencies. Joseph made a very good point that the idea and the value of these things depends on functionality, and we really have yet to see that. Ethereum 2.0, don't even know where that is, right? Dogecoin infrastructure that Musk keeps pretending he knows how to build, it's not going to happen. So, we got to think about just what it is. If you're talking about cryptocurrency, basically what we're doing, just like we did with Amazon, like all these other services, we've replaced one master for another. It is a fiat currency. By the time it comes into circulation and is actually recognized by everybody, it will be a fiat currency. So you're not really skipping out and making something different. So you got to understand what it's going to end up like. And I'm sure the value of it wouldn't be as crazy if people understood that it's just going to, if it's going to replace a dollar, it's just going to become another dollar.
Well, Joseph, what do you think about El Salvador becoming the first country to recognize Bitcoin as a legal tender?
I think it's actually a kind of a adroit political move on their part, and I'm surprised more South American companies haven't done it or even attempted to do it. And it's primarily because a lot of these companies are so heavily indebted to the IMF and the World Bank for reconstruction because of the 80s and what they did in the 70s, 80s, and 90s. That Bitcoin and other cryptocurrencies, when they came around, gave them a chance to actually build and generate wealth that the Americans don't have their fingers into. And I don't know, I kind of support it. I mean, the blanket this is going to get a little in depth. The blanket neoliberalizations brought about over the past 30 years have effectively bankrupted most of Central and South America. And this actually gives them a chance, like an opportunity, I suppose, to get back onto like a step ladder towards and even a more even playing field, even though the Americans will probably find a way to kick the ladder out from under them like they usually do.
Well, the ladder's already kicked out from under them. The majority of the coins are generated in China and America, right? So they're still locked into somebody else's system, right?
What Vishal has on the screen right now is called the Petro.
Petro, yep.
Now the Petro is perhaps not the best example of this kind of thing. But it is a coin in which Argentina, I think it's Argentina, made to supplant
Venezuela, wasn't it?
Venezuela. Thank you. Venezuela made to supplant their own fiat, which is so hyperinflated it's utterly worthless. When the majority of the people in the country saw Bitcoin as a way out. Now, the Petro is obviously not the best option. It has not seen widespread acceptance, but it does represent a potential direction in which these countries could potentially go in the future, especially with the decentralized nature of the technology. Cryptocurrency offers to different regions based on their economic strength. Yeah. In this case, it has more of a democratizing. It can act as more of a democratizing force. I'm interested in watching it personally.
Yeah. So technically, the Petro is the first state-made crypto, then, because it is the government, right? I believe.
I believe it is the government. Yeah. Yep. And the digital yen is the second, I think.
Chinese one. Yep. Okay. And yeah, it's surprising because this actually came out in 2018.
Yep.
No, they got onto it early. I don't know how it's set up, whether they're using some sort of saying it's a petrodollar. I'm assuming that they're not hedging it, but they're linking it to oil prices. Is that where it's connected?
It said here would be backed by Venezuela's reserves of oil, gasoline, gold, and diamonds.
So again, to a certain extent, they're just recreating a currency, a national currency, right? And not necessarily skipping right off into the digital currency route where there is nothing backing it, right? Yeah. They're still following the same fiat formula by having it.
Yeah, functionally it's a stablecoin.
Yeah.
Except it's not stable.
I won't get into it too much, but I recommend this book here. I don't know if you guys can see it. It's very controversial. It's actually one of the top nonfiction books on Amazon worldwide. And it's by the guy here in Vancouver, Marin Katusa, who runs a mining fund here in Vancouver. He wrote this book, The Rise of America, The Remaking of the World Order. Very contrarian book. But if you're into cryptos, he talks about government cryptos and essentially understanding the way cryptos are created by the government, you have to apply a different mindset. It's basically currencies are now going to be called digits rather than currency, and it's really just going to be numbers on computer screens. And he goes into MMT. There's like 50 pages on MMT itself, of course, with Kelton, who's the big proponent of MMT, and he talks about how digital currencies, government-controlled digital currencies, will be implemented for MMT, and it has to be. And currency basically becomes digits, which means debts don't matter and money supply don't matter. It takes some time to wrap your head on. Like he's a mathematician, and it's basically what the MMTs talk about debt and money supply meaning nothing when currency is now digits rather than currency. And instead of inflation and interest rates, we're going to have taxation for government to remove the excess money supply or to increase the excess money supply. But technically, it's not money. It's actually called digits. So I would recommend this book. It's very controversial. I'm like halfway through it. It's a bit scary because obviously, a lot of the stuff that I've been predicting and saying on the show is going to come true. Yeah, definitely take a look at it because it does explore even the Petro and how many other countries are going to be doing this. But it's a whole paradigm shift. Like for me being like a hard money guy, reading about central banks, a lot of the reviews about this book, a lot of people are ripping on the MMT part because of the whole idea of now everyone can be given money for free and we don't have to worry about the debt. It's sort of very, strange. And he sort of provides a case how you can do that without seeing inflation. So I would definitely recommend it. Just came out, I think, like 2 weeks ago. One of the top, nonfiction sellers around the world. And I'll maybe get into it when I finish the whole book. But it does explore this topic. And I think it's something, well, I know you guys will enjoy, but even our viewers will enjoy as well.
Well, on that note, we are somehow out of time. That was the fastest half hour for me, at least.
Yeah.
But thank you so much for tuning in, and we will be back next week at the same time.
Absolutely.
Take care, guys.
Take care.
Thank you very much.
Bye, everyone.